Tax season. That time of year that, let's be honest, can feel a little confusing for a lot of us here in Malaysia. But what if I told you that the entire calculation, the whole thing, actually boils down to a simple five-step journey? Well, in the next few minutes, we're going to walk that path together and hopefully turn all that confusion into some real clarity.
You know that feeling when you look at a tax form, all those boxes, all that jargon? It's easy to feel totally lost. But here's the secret. Behind all of that is a surprisingly logical process. It's not some scary monster, it's actually more like a straightforward puzzle. And today, we're going to solve it together.
So, let's think of this whole thing like we're going on a journey. And every good journey needs a map, right? There's a clear starting point, a few key landmarks we need to understand, and then a final destination. Well, our map is the simple five-step framework you're about to see, and it's designed to take us from our total income right down to our final tax bill. And here it is. This is our roadmap. It's just 5 simple steps. We start with everything you earn. Then we start subtracting things, your reliefs and deductions. After that, we apply the tax rates to whatever is left. And finally, we take off any last-minute discounts. See, it's kind of like a funnel, right? We start big and we narrow it down, down, down until we get to that one final super important number.
Okay, but before we actually hit the road on this journey, we need to understand the language. Every map has a legend, and tax is no different. If you can just get these next 3 definitions straight in your head, I promise the rest of the process becomes so much clearer.
All right, first term on our list, total income. And look, this one's super simple. It's the biggest number we're going to look at today. It's everything you earned for the year from all your different jobs or side hustles before a single thing gets taken out. This is our starting line.
Okay, next up is chargeable income. Now, I really want you to lean in for this one because this is probably the most important number in the entire calculation. It's your total income after you've subtracted all the reliefs you can claim. And why is it so important? Because this is the number that decides which tax bracket you're in. This is what you actually get taxed on. And our final key term, the tax rebate. The best way to think about this, it's like the final discount coupon you use at the very end of your shopping trip. See, reliefs reduce your income before you calculate the tax, but a rebate, that's a direct discount off the final tax bill you've already figured out. For Muslim taxpayers, the zakat payment is a perfect example of this.
Okay, that's enough theory. Let's make this real. The best way to get this is to see it in action, so let's jump into our first example. We'll start with a really common scenario, a single person filing their taxes. So, let's meet our first taxpayer. They make 60,000 ringgit a year. They've got their usual EPF and insurance contributions. They spent a bit on education and lifestyle stuff, and they paid some zakat.
I think this is a financial picture a lot of us can relate to.
Okay, step 1. Like I said, this is the easy part. Their total income is just their salary. So we're starting our calculation with 60,000 ringgit. Simple as that.
Now we get to the really powerful part. This is where we start shrinking that number down with reliefs. Every taxpayer automatically gets a 9,000 ringgit self-relief. But on top of that, they can claim for things the government wants to encourage, right? Things like saving for retirement with EPF, getting insured, or spending on education.
So you just do the math. We take that 60,000, subtract the 24,000 in total reliefs, and what are we left with? 36,000 ringgit. This is our chargeable income, see? We're not taxing the full 60K, just this much, much smaller amount. And this table, this is where you can really see how Malaysia's progressive tax system works. It's super interesting. Notice how the whole RM 36,000 isn't just taxed at one single rate? No. The first 35,000 is taxed at a lower rate, just 6%. It's only that next 1,000 that gets bumped up to the 11% rate. You add those two pieces together and you get your gross tax of 2,210 ringgit. All right, we're at the home stretch, the very last step. We take that gross tax of 2,210 and we apply our final discount, that 500 ringgit zakat rebate. So the final tax this person actually has to pay is 1,710 ringgit. And that's it. We followed our 5 steps and got our answer. Okay, so you've seen the basic model in action. Pretty straightforward, right? But now, let's add a layer of complexity. What happens when you have a family? Because that unlocks a whole new world of reliefs. So meet taxpayer number 2. A little different this time. They earn 80,000 ringgit, they support a non-working spouse, and have 1 child. And they also have some medical expenses for their parents. These family details are going to be absolutely key. And just like before, step 1 is a piece of cake.
Their total income from their job is 80,000 ringgit. That's our starting point.
But here, this is where their story gets really different from our first example. Because they have a family, they get to unlock a whole bunch of extra reliefs. On top of their own self-relief, they get another 4,000 for their spouse, 2,000 for their child, and up to 5,000 for their parents' medical bills. You can see how quickly these family reliefs start to add up. So let's run the numbers again. 80,000 minus those massive reliefs gives us a chargeable income of 51,000 ringgit. I mean, just look at that. They've shielded almost 30,000 ringgit from being taxed at all. That is the power of reliefs in action.
Okay, time to apply the tax rates. And because their chargeable income is a bit higher, you can see they've just tipped into a third tax bracket. The first chunk is taxed at 6%, the next chunk at 11%, and that final little bit gets taxed at 19%. This layered approach gives us a total gross tax of 3,940 ringgit.
And for the grand finale of this example, we take that gross tax and subtract their zakat payment, which was 1,200 ringgit. This brings their final tax payable all the way down to 2,740 ringgit. And that's our second case study. Done! Okay, so we've been deep in the weeds with the numbers. Let's pull back for a second. What are the big, key ideas we've just seen in action? Let's zoom out and just summarize the main takeaways. Honestly, if you remember just one thing from our chat today, please let it be this slide. This is where almost everyone gets confused, so let's break it down one last time, nice and clear. Reliefs are used early in the game to shrink your chargeable income. Rebates come in at the very end to give you a discount on your final tax bill. One lowers the mountain you have to climb, the other gives you a helping hand at the summit. It's a really crucial difference. So what does this all mean? It means that this whole, sometimes scary-looking process, it all boils down to this one simple formula you see on the screen. This is it. This is the master key. If you can understand the flow of this formula, you can understand your taxes. So there you have it. We've gone from the what to the how. You get the framework, you know the lingo, you've seen the master formula. The only question left, and it's the most important one, is this. Now that you know the rules of the game, are you actually making them work for you? You now have the tools to answer that question.